Okay. Peter Rose, founder of Longwood Currency Trading. In looking at some of the videos that folks are posting out there about Forex trading, it's a little confusing as to really what they're saying as to where their profitability is and how consistent they are in their trading to purport what's going on. It's very easy for someone to say, oh, I made $100 or 1,000 today, whatever that number is. But what does that mean? What does that $100 mean? If I had a $1,000 account, I was trading a mini. In order to make $100, I'd have to make 100 pips, and if I did that, I'd have a 10% return, right? Because $100 divided by the $1,000 that you need for a mini account. Well, you don't need a mini account. You can put $500 up for margin. But in my realm, if you're going to trade a mini account, you have 1,000. You're going to trade a full lot at $10 a pip, you need 10,000. You could trade 10 lots, you need 100,000. Okay, that just makes the calculation simple and gives you plenty of runway, cash, so that you can add more lots in later as you go. But it's the entry point that we're talking about. So, yeah, so $100, that's if I made $100, that would be spectacular if I did that on a mini account, right? I'd make 10%. But if I was trading 10 full lots at $100 a pip, and I made $100, that's 0.1% return, 1 pip. So would I be, if I said I made $1,000, on the, then I'd be 1% on that $100,000 account. Is that good? Sure. But is $100 on a $100,000 account good? No, not so good. I mean, I'm focusing on the $100 because I think it's easy for everybody to see those proportionate values as you look at a $1,000 account, dividing $100 by a $1,000 account, by a $10,000 account, by a $100,000 account, as the chart shows that I just put up. So if you look at that now in relationship to, I make $100, if I do that, every day for 5 days, and I do that 50 weeks of the year, I can make $25,000. But if I only do it 3 days a week for 40 weeks, I make $12,000 a year. So if we come back from that graph there, what do those numbers mean? I think the only thing that makes sense is to quote from a percentage standpoint as opposed to the dollar amount. I have a sip of coffee here. It's really cold today. I had mentioned in the video the other day that I made the danger of reverse staging into far out of the money positions. That I did a travel log with you. I went out to the wood pile and I said, we're expecting this big storm to come. We got a big storm. Yeah, we got a big storm, all right. Just put up some pictures. The first picture I'll put up is a shot of Lucas walking Bo out in this blizzard conditions. You can just barely see him in the middle of the screen. The second shot will be after the storm cleared the next day, showing how much snow we got. We get about 14 inches. And the third picture will be a picture that Sue got from back in the woods behind the house at sunset. So those are pretty nice pictures. In any event, when a lot of the times I'll say, oh, I made $500 today, or I made $3,000 today, or whatever. And so that's a great number. You go, oh, wow, I wish I could make $3,000. Well, yeah, but you're not going to do that on a mini account. and you're not going to do that on a $10,000 account. I mean, $3,000 against a $10,000 account is a 30% return. You're going to make 300 pips, right? Are you going to be able to do that in a day? Could you do it in a month? Well, yeah, if you get your timing right and you're in a long-term trend. You see the problem there with stating that. And I think I'm fairly transparent in my channel, and that I'm trading a large account. And so the values that I'm going to come up with, you know, I might have a target of $500 or $800 a day. Does that mean I'm going to get $500 or $800 a day, 5 days a week? I mean, some of the stats over periods of time indicate that. Yeah, sure. But is that reasonable? Well, probably not. You know, I can go for long periods of time where I'm making $1,000 a day, and then all of a sudden I'll be down with a carry trade, and I'll carry that for a month. I won't trade at all. So at the end of the year, when you're looking at your account, as everybody does, they'll say, I made 10% on my money for the year, or I made 60% on the money for the year. I think those end of year statements are clearer than talking about what you make on a daily basis, because you have some idea. If somebody says, well, I made a couple $100,000 this year, they didn't do that on a $50,000 bank account, right? Again, unless your leverage is really high. And I really discount the validity of the percentages or the dollars made by folks that are trading at 200 to 1, because I think that's rare that you can get away with that. You have to be an expert in order to do that. If you look at the bank traders, they're not trading at 200 to 1, they're trading at par, okay? So that's the complete risk management. And even in the stock market, the best you're going to get is 50%. So this leverage that we've got in the currency market is crazy. It's not safe. But the contract sizes are so large, $100,000, that you facilitate that multi-contract capability as long as your account can withstand a theoretical, 50 pip drop immediately over the number of lots that you're trading. And so those are why you have leverage guidelines in the developed countries. We're allowed in the United States to trade at I think 50 to 1 is a safe bet for that right now. But you do need 5% margin to make your trade. And so when I say, oh, I did a video when I was traveling and I made $900 on my phone. I don't trade on my phone, but I saw the market moving and I took advantage of it. And when I get off the plane, I had made $900. But the question is, what was my bank size when I did that? It wasn't, it wasn't $10,000 because that would have been 90 pips. It was probably $150,000 bank that I went in there and made that up. Let me get my calculator out here. $900 divided by 150. That would have been a 0.6% return on a day. If you can make 0.5% a day on your money, or 0.3% on your money a day, whatever that bank is, you're doing really well. I mean, look, if you trade 3 days a week, you're about 1% a week. You trade 50 weeks, you're making 50% on your money. That's 3 pips on per thousand on any size account. So you have to really understand the underlying mathematics of how these calculations are done in order for you to determine how well you're really doing, instead of comparing yourself to somebody who says, well, I got off the plane and I made $900. Well, yeah, sure. If I would have had $1,000 account, I wouldn't have made $90, I'd have made six. You know, that kind of thing. So be sure before you are going to listen to somebody as to what their skill level is, be sure you can identify clearly what percentage they're getting as a return on their bank on a daily basis. And if you see some idiot saying, oh, I'm compounding my money at 2% a day, you can do that on a spreadsheet, but you're not going to do that in real time. You can do 2% simple return on your money a day, right? 2% of $1,000 is $20. So that's 20 pips. Can you make 20 pips every day? Well, maybe not, but you could probably come pretty close to that. You're not going to do that every day, but you could do 10 pips a day. So you could do 1% simple interest. But if you make a 1% on a $10,000 account, you make $100, right? That means that the next time you're going to have to make about 1.13%, or you're gonna, instead of making 10 pips, you're going to have to make like 11 pips in order to get that same 1% return on your now $10,100 account. So that's why I'm not a big fan of compounding, because you lose sight of the trading that you're doing, and you're trading for money instead of trading for consistency. I don't compound. I mean, I'm trading six-figure account, and not just 100,000, but I'm trading a good six-figure account, and I do not compound. And when I was back trading a $10,000 account and $30,000 account, I did not compound. I don't believe in compounding. I think the only way you can develop an idea of the consistency of your trading is to be consistent in the way that you trade, which is simple return against risk. Anyway, just wanted to make sure that you were aware of the divergence of ways that you can state your returns and how well you're doing as a function of either a percent against your risk, and is that percent being achieved through compounding over the period, or are you doing a simple return? And so I could say, well, I did a 30% return against my bank, which is an enormous amount of money. I mean, if you're going to do a 30%, you're great. The 30% compounded is a more complex process than a 30% simple return, which you're really working. I mean, at the end of the day, at the end of the year, 30% is 30%. My account has grown 30%. I'd rather say, oh, I started with a $10,000 account, and now I have a $13,000 account. That's a 30% return, rather than to say, well, I had compounded returns of that. Well, what does that mean? That means maybe on 2 or 3 trades you made $2,000 or $3,000, and on the rest of the trades for the year you made $300. I mean, and you ended up $3,000 ahead for the year. At the end of the day, $3,000 is $3,000, and who gives a shit how you got it, right? And so do it the simplest way that you can, so that you can gauge whether you've been consistent throughout the year. Because if you're doing simple returns, that inconsistency in trading will show up at the bottom line, and you can say, geez, I thought I was on track to do 30% return this year, and I ended up at 10. Well, I can go back into my transaction register, and I can kind of figure out what happened. Well, I'm not going to be able to do that if I've been compounding, because the numbers are basically all over the place. So when I'm working with my trading, I have a spreadsheet. I don't have a spreadsheet. I just write it down on a piece of paper, what I do on a daily basis, and I calculate the net value of the bank that I traded. So one time I might trade $50,000, and then the next time I might trade $100,000, and so it's 150,000, divided by 2 trades is $75,000 risk, and I made $750 for the day, and I'm up 1%. But that's how I figure I can always bank on my consistency that way, so I know whether I'm doing okay. The big question to ask is, if you did 0.1% a day, is that good? Well, you know that if you could do 1% a day, even in simple return, that would be really good. But you have to look, and this is one of the things that we do with students that I consult with or take a course, is we get down to the real early in the instructional processes. How much money do you want to make? How big of a bank do you have? What would be a reasonable return on a daily basis for you in order to get to this goal that you're looking for? I mean, that's a lot of mathematics that goes in, not complicated mathematics, it's arithmetic, that goes into helping you establish not only your trading plan, but the framework of rules that you're going to use in order to accomplish the goals that you have. And so take a look at both of those aspects. Are the rules that you have for your trading plan consistent to bring you the average daily return? That's why one of the major metrics of the 4 metrics that we look at, that fourth one, is that your percent return against risk is really a kind of an important metric for you to have. Unfortunately, you're going to have to trade a couple of hundred times in order to have the data set large enough in order to have confidence that that value is valid. It sounds more complex than it really is, but it takes time to set the groundwork for all this stuff that you're going to build the whole rest of your trading on. If you don't have a mentor that's doing that for you, and you're not doing it on your own, you're walking around blind without a cane, pal, because you just can't. You can't project anything. You can't. How can you have any confidence in your trading? That's why some of these guys say that trading is so stressful. It's hard work. It's not stressful if you know what the foundation of your trading is. How could it be stressful? You're going to lose sometimes. Sometimes you're going to lose really big. But in the long run, you'll be okay. I mean, I'm down a horrendous amount right now. And we're coming up. This is middle of December of 2022. And I have to make a decision, either to cut that loss. It's tens and tens and tens and tens of thousands of dollars behind. I've only had 3 losses this year so far for a $10,000 overall loss. And I'm up 90% on my risk for the year. And now I'm sitting here with this enormous loss, which I'm trying to work my way out of that, but we're coming to the end of the year. So if I don't take that loss now, I'm going to have to pay income taxes against it, and it's a big number that'll sit as a positive gain on my books, and I'll end up paying somebody's yearly salary in taxes against money that I didn't cash out. So if I hold it and pay those taxes, and the thing loses this money anyway, oh God, yeah, I would be in deep shit. So I'll have to take that loss. But when I do take that loss, it'll simply reduce my overall yearly profit from against risk from 90% to probably 30%. But because I'm dealing with large numbers, the 30% return is good. I mean, that's good. That's good money. Could I have done better? Yeah, I just got caught. But the reason I got caught is because I'm trying to make $1 million, not pay my light bill. And I've just had a couple of videos talking about that. You might be interested in going back, looking at the titles and seeing the difference between paying your light bill and replacing your job income and going for $1 million. It's a different mindset. And so somebody's going to wag at me and say, oh, at the end of the year you lost, tens and tens of thousands of dollars. Yeah, but I made tens and tens of thousands of dollars. What did you do, Slick? So be wary when you listen to folks talking about how they're doing, and look at the underlying metrics that they have and the underlying stuff. I don't talk a lot about those metrics from my standpoint because my metrics are different than what your metrics are going to be. So rather than saying, oh, I made 0.3% today, that could be I made $3 on a $1,000 account, or maybe I made $300 on a $100,000 account. What does that make? I'll say, well, I made $300 today. And if I could do that every day at just 0.3%, I'd make $72,000 a year. Boom. Is that possible? Yeah, if you're careful. But not in the realm where I'm trying to do. I'm not trying to make 0.3%. I'm trying to make maybe 0.8% against a large bank. Be very careful about how you look at your own trading, because if you get it wrong, you'll think you're an idiot and not doing as well as everybody else, whereas you may be doing really good. You need somebody objective to look at your financial situation, just like you would if you went to a financial planner. That's what I do with the folks that I do consulting with. That's why it costs a lot of money. Because I bring more value to the table than somebody that just says, oh, you were using an engulfing candle pattern here and you should have been more cognizant of your RSI. Really? Okay. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.